Well, when we look at the budget, our sort of general reaction is what the government's facing is a run of fairly large commitments, things like Gonski, national disability and paid parental leave. And what they've tried to do is make room to put those in and still maintain a budget. So the way you move forward is basically everybody sort of shares some pain in the short term, and in the medium term you get back to something that looks reasonably sustainable. You're getting fairly close to a budget surplus by about 2018. When we look at it, at the end of the day, that sort of adjustment process is quite strong, but it's not the worst we've ever seen. The Costello and Howard adjustments in the mid-90s were much more aggressive. We look at their forecasts. They've actually got growth forecasts a bit lower than us. They've got high levels of unemployment. But generally what I'd say is their parameters, if you like, the effects in terms of the economy, they look pretty okay to us. And as we look forward, what we would sort of say is risks. One of the risks will be, whilst in itself the actual withdrawal of activity is probably not enough to really crunch the economy, it may hurt confidence a fair bit, and that makes life a bit tricky. The government is actually forecasting 6.25% for unemployment for the next 2 years, so they're actually a little bit more negative than we are. I think the other big uncertainty is politics. We just don't know how much of this budget is going to get through the Senate, and so that makes life difficult. So if I had to sort of summarise, the summary is making room for other commitments that they've signed up to, trying to repair the balance in a structural sense in the medium term, and sharing the pain around to just about everybody. From a business point of view, the direct impact immediately is $850 million worth of reductions of industry assistance schemes. So they will basically depend on which industry you're in and what scheme you're subject to. To some extent offsetting that, you've got reductions in the company tax for everyone other than the large corporates. They're also hoping to get through the Senate the end of the mining tax and also the carbon tax. So they're the direct effects. The indirect effects, I think, are coming to how the consumer might respond, particularly to less income in their households as a result of tightening up of essentially the government transfers, and also the fact that some people will be paying higher tax rates. So I think there are those sort of retail effects, but the big ones tend to be the tax side and also the abolition of some of the industry assistance schemes. When we look at the overall effect of the budget on the economy, when we sort of just look at what's called a structural surplus, or if you like, what is the budget doing to the economy, our estimates would say that around about 0.5% off GDP per annum for the next 3 to 4 years is really what the government's doing. So it is actually acting as a brake to the economy to trade that off against a more sustained fiscal position in the medium term.